The S&P 500 as of this recording is up 1.2%. The next couple of days will be important. These bear market rallies are fast and they are strong. This kind of rebounded give you the opportunity to get a little bit money back. But what I'm doing, for example, with space. So, ladies and gentlemen, this is how fast it can go from red to green. What a day yesterday. And the S&P 500 as of this recording is up 1.2%. What a day, right? And those days can be quite lucrative if I show you here my some of my leverage products that I bought this morning. My opinion is formed obviously through my research and also through following very experienced traders, investors, seeing what they are doing, seeing where they are placing money, what they think about today and tomorrow. Because for me as a long-term investor, I have my long-term portfolio, but this is a little bit boring, right? Just being long and just buying every month. So there would be not much to talk about. But with this changing market situations and bear markets coming up, there's a great opportunity for volatility and therefore also for trading. And as of this morning, I followed some of my regular routines. I was through Twitter and understanding what's going on this morning into the market, and it was quite sure that most of the people are more bullish for today because there's a couple of things. First, the market was quite oversold over the last couple of weeks. Second, there was a very high put to call ratio, as you can see here in this graphic, which gave the market a little bit of a short squeeze. Third, there was also the VIX triggering a buy signal for the markets, as you can see here, a Goldman and Sachs situation and explanation that the markets can go up a couple of percentage once this is achieved. And therefore I bought a couple of products here, as you can see, bull leverage products. Those products are leveraged call options on the SPY, so on the S&P 500 as well as Tesla, and those are printing quite nicely. There is some project about this on the way. I'm thinking about making maybe an only solely channel about day trading. If you are interested, I'm trying to put some in my Discord. If you're interested to get into Discord, check out the links below. But totally, it's very hard to give real time, feedback what I'm doing and so on. So I need to figure out a way to share this with you as well. Now, if you are looking into the markets now, everything that was smashed, it's going back up, okay? And this is basically normal. These bear market rallies are fast and they are strong. However, the overall situation is still with a big question mark, right? A little bit is a good word. Massive inflated valuations through the actions of Fed over the last 2 years. We have the Fed maybe behind itself because they are looking and they are saying they are looking into data, and the data is basically lagging because this is always data from a month before, right? So they are lagging in their actions. And the third thing, everything is showing us that we are in the bear market, from technicals through how the market reacts, right? So you can see here Tesla plus 10% almost. Yes, because obviously we were shredded absolutely over the last couple of months, right? We lost 30%, right? Or space, obviously as well. We lost also here 43% in 1 month, okay, in the worst January ever. So this kind of rebounded give you the opportunity to get a little bit money back, but never do like crazy, oh, now I want to get all my losing backs and trying to, in your long-term hold positions, to try to be a hero, okay? So during my research, I actually found something that I wanted to share with you. It's very old, so excuse the quality, but Paul Tudor Jones is one of those billionaire traders out there, and he have foreseen the 1987 crash, which was also due to inflated valuations, and he's talking about some things that you should keep an eye on. So let's have a look.
Go to the American Exchange Live, where there's a tremendous amount of selling there as well today, where we have futures trader Paul Tudor Jones, the president of Tudor Investment. Paul, can you hear me okay?
I can hear you, Bill.
Okay.
I'm not sure I want to, but I can.
Yeah, I can imagine, buddy. All right, give it to me straight, Doc. What in your view is going on?
I think that we've got a market that has been seriously overvalued for some time. I think that what we've witnessed the past couple of days has obviously been the piercing of this bubble. And I think that what you saw today and what you may see tomorrow morning will be the culmination of this selling climax for now. And I emphasize for now.
Now, you had told me a few weeks ago that you were looking for a drop. Did you expect it to be this precipitous, this quick?
No. We thought the market would be under pressure through October. We thought it'd go to the low 2200s. But we thought you'd see this kind of a break sometime early next year. But quite apparently, the market's doing exactly what it always does, and that's fooling 99.9% of the people. And that's why it's happening now. I would say Wall Street uniformly was unprepared for this magnitude of a drop. And, of course, that's why you got it, because that is the nature of the market.
Yeah. Now, you know, people had been looking for a drop when the bear market set in, perhaps after we had hit 3,600 on the Dow. Is this the kind of a drop where we're going to wash that out, have a bear market that could last a few weeks and then it's over with and we resume the uptrend? What are you thinking?
I think that you are in the beginning of a primary bear market that's going to last for, unfortunately, a long time to come. The action today, if you were a stock trader, and particularly if you were a stock trader trading simply on a technical basis, you would have made two trades in the 80s. You would have bought the market in August of 82 when you had record up volume and you had a record up day on a nominal basis, and you would have sold the market beginning on Friday when you had range expansion, a record nominal down day, and also record volume. Today is simply a confirmation of what began on Friday. The only thing that I can take heart in is I think that you did unquestionably today finish this wave of the selling climax. I think you've got two things to look forward to in the next 24 hours. One good and one not so good. The one bad thing is that this afternoon, Proctor on his hotline will unequivocally come out, not unequivocally, but I would say the odds are over 95% that he'll come out and say that the bull market is over and then we're now beginning a major league bear market. But I think a lot of people, particularly professionals, recognize that fact, and that was certainly discounted to a great extent today. The second thing that we have to look forward to in the next governmental and administrative intervention in foreign exchange markets. We should see them in the debt markets. We should certainly see some type of constructive action to stem what has unquestionably been a panic. And I think that you'll see the market on the cash side start out weaker in the morning, but I would, my gut instinct tells me that you'll finish up on the day tomorrow. I think the prudent thing for investors to do at this point is unquestionably not to buy.
Yep.
So he was talking, one of the other things which was very important, about volume. Volume is always a nice indicator that people are entering or exiting big positions. And if this is the case, you see like institutions are offloading positions or entering positions. And if you are looking here into the S&P 500 and looking into the volumes, then you're seeing a kind of flat situation, except that there is one big volume day here, and it's around what is it? Let me see. It's around 28th of February, and by then this is called capitalization. This is very known that by then it's either the top or the bottom of a current trend. Okay, and here it was the bottom of a trend, of a downtrend, where a couple of days later or a week or 2 weeks later we saw the bottom in the overall pandemic crash, let's say. And the next a little bit recent spike in volume was here, where officially, if you're looking, then basically, let us have a look because it's a little bit hard to show it here. Yeah, so you see some spikes around October and November. I cannot quite show it to you, but also there you have seen some spikes, which usually some quant systems, for example, show that those days are then going, or some regimes, how they call them, twist, right? From bullish to bearish, for example. So this is something very, very interesting to watch over the next couple of weeks as well, to see, okay, is this now the bottom? Because what we're seeing now is just a snapback rally, okay? The next couple of days will be important. Today, when you're watching this video, there will be more inflation data. So important for the Fed, what the Fed will do. We will see maybe an easing of the inflation, which then could spark a rally. But 4,600 would be somewhere where we see from a technical perspective. Let's have a look quickly into the S&P 500 again. 4,600, 4,500-ish would be the top where the S&P could go. So around another 3, 4, 5%. But this would be then the end of the rally, and then we see more downturn, in my personal opinion, okay? That opinion is formed of experience of many other traders and data that I'm seeing and so on. So we should see if this will be the case. Definitely, I think the overall crazy bull market is over. I think many of you are agreeing. And now finally to the last point, what's happening with my long-term portfolio then, right? What I'm doing, for example, with space. Have a look. So as I said, the long-term portfolio is quite boring because it's just holding, and I'm still holding everything, and this is mainly space, and I'm quite happy because I am reducing every month. I can buy every month with some savings that I have, and whatever I can put into stocks, more and more space, and my average price slowly going down, and soon it will be in 1 digit. This will be amazing because I started to buy space with an average of 18, then it went up to 22, and now it's going backwards, and then it just takes space going to 10, 12, 13, 20, 30, and I triple my money, which would be absolutely fantastic. So this is the overall goal, and this is still the strategy. So don't worry, I'm just trying to get you all the information about all the markets to understand, to learn, because in bear markets, there is the generational wealth that is being created, and then we just put it back into very long asset management, and then basically you hold it for 10, 20 years until the next crisis. Peace.